Here are 3 questions you need to ask to ensure you're actually getting a good deal on your mortgage. Shopping for a mortgage can be super challenging. There's lots of confusion and smoke and mirrors, and these 3 questions, really 3.5 questions, cut through some of the noise to help you make sure that you understand what you're actually getting yourself into. So question number 1, this one's the easy one. What's the rate? Okay, everyone knows to ask this, but the key really is context. And so what the other questions do is they provide context around this question to make sure that you're getting a full picture. Question number 2, how much are you paying for that rate? It is very common for lenders to quote rates with an associated cost called points or maybe a buy down. And this really screws with the whole shopping process, because what can happen is we might say, hey, we're offering you a 6% interest rate. And then lender B comes in and says, hey, we're offering you a 5.5%. But then when you ask this question, you realize that they're charging you $3,000 to get that 5.5%.
Son of a bitch!
And if we were to match that cost, if we were to charge you $3,000, we might be at 5.25% or maybe 5%. I don't know what it is. The point being is that we're not comparing apples to apples, and it's just super confusing when you're comparing different lenders. So this is kind of the bonus question. If the answer to what am I paying for that rate is anything but 0, then you want to ask, what is the par rate? The par rate is industry lingo. And what it is it's the rate with 0 extra cost or credit applied. This is really what you want when you're shopping mortgages, because you don't want to be comparing what lender A might be at 3,000 for points and what lender B might be at 2,000, what lender C might be at par, okay? You just want everyone to give them the par rate, because that is the most equitable way to compare all these other lenders. Question number 3 is, what are your fees? This one is really important. Typically, when you get a loan estimate or a fee sheet, it's going to include a lot of stuff like title fees, appraisal fees, taxes, and insurance. This is really important to understand. Lenders do not control any of these fees. Taxes are whatever the county says they are, and insurance is whoever you pick. What often happens is that lender B or C or D, we always see them underestimating on taxes and insurance, and they're doing that to give you an attractive low cost number. And I just don't think that that's fair to you as the consumer. I'd rather costs come down throughout the process just to be safe rather than go up, but not every lender feels that way. The fees that you want to specifically ask about that the lender actually controls are going to be things like origination fee, admin fee, processing fee, underwriting fee. Every lender will call them something a little bit different. Sometimes they don't even have any of those on a fee sheet, because typically what they'll do is they'll take those costs for those specific items and they'll wrap it into the overall cost of the rate, which is totally fine. And it actually is really beneficial because you can just compare the rate. By asking these questions, what is the rate? How much am I paying for that rate? What's your par rate? And what are your fees? You will be so much more educated than the average first-time home buyer when they're shopping for a mortgage. And it's super important to get a good deal on your loan.